Okay, so let us continue from page number 1.9, CA Final GST, Concept of Supply, Section 7 of the CGST Act. The concept of supply is the keystone of the GST architecture. The provision relating to the meaning and scope of supply are contained in Chapter 3 of the CGST Act, read with various schedules given under the said Act. Following sections and schedule shall be discussed in this chapter to understand the concept of supply. So they have given us few sections, definitions and etc. Okay. So section 7 is about meaning and scope of supply. Section 8 is about taxability of composite and mixed supply. Schedule 1 is activities to be treated as supply even if made without consideration. Schedule 2 is about activity or transaction to be treated as supply of goods or services. Supply of goods or supply of services. And schedule 3 is about activities or transactions which shall be treated neither as supply of goods nor as a supply of service. So now here this is one line thing given, okay, but meaning and scope of supply, it has its own definition. Taxability of composites and mixed supply has its own meaning and interpretations. Apart from that, activity treated as a supply even if made without consideration has its own theory. Then activities or transactions to be treated as a supply of goods or as a supply of service is again bit lengthy thing to be discussed. And schedule 3, activities or transaction which shall be treated neither as supply of goods nor as a supply of service, which needs to be interpreted profoundly, particularly I say, because this thing is time and again asked in the exam, and we are supposed to interpret lot many things over here. Okay, so let us continue. Provision of section 7 containing the meaning and scope of supply are as follows. Statutory provision, section 7, meaning and scope of supply. Okay, so subsection 1 clause A of supply includes all forms of supply of goods or service or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. In the course or furtherance of business is important over here. Any goods or any service or both, okay, which is supplied as a sale or transfer or barter or exchange or license or rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. So consideration should be there, it should be transferred by a person, and course or furtherance of which should be in the course or furtherance of business. That is 7.1a. 7.1a is the activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration. Explanation. For the purpose of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, or any judgment, decree or order of any court, tribunal or authority, the person and its member or constituent shall be deemed to be two separate persons, and the supply of activities or transaction interstate shall be deemed to take place from one such person to another. So here they are talking about that activity or transaction by a person other than an individual to its member or constituents or vice versa for cash, deferred payment or other valuable consideration. Okay, so anything contained in any other law for the time being in force, or any judgment or decree or order of court, tribunal or authority, the person, its member or constituent shall be deemed to be two separate persons. The person and its member or constituent shall be deemed to be a separate person, and supply of activity or transaction interstate shall be deemed to take place from one such person to another. Examples are association of person and their members, or trust and the trustees. Okay, both are separate. When trust is incorporated and trustees are availing any services from the same, so both are distinct, separate person, not a distinct but separate person. Okay. Yeah. Next, importation of services for a consideration whether or not in the course or furtherance of business. So here it is again supply. Okay, if it is in the course or furtherance of business, or if it is not in course or furtherance of business, but any service is imported, it is a supply. And number 7(1)(c), section 7 subsection 1 clause C, the activity specified in schedule 1 made or agreed to be made with or made without a consideration. So whatever is mentioned in schedule 1 will again become supply if it is made without consideration. Okay, so initially here in the first part in 7(1)(a) they have mentioned that there should be a consideration, there should be a person, and it should be in the course or furtherance of business. But later point of time when they are coming, they are mentioning that without, if it is without consideration, again it is supply if it is between two separate there is a member or something is there. Okay, member and trust and etc. Okay, trustees and trust, or members and AOP etc. It will be considered two separate person when this service is provided. Okay, and here in the first part it was in the course or furtherance of business, but in importation of service for a consideration, if it is not in the whether or not in the course or furtherance of business, then also it will be considered as a supply to the business. Okay, now section 7 subsection 1a is where certain activities or transactions constituted a supply in accordance with the provisions of subsection 1, they shall be treated either as supply of goods or supply of service as referred in schedule 2. Okay, so whether certain activity or transaction constituted a supply in accordance with provision of subsection 1, they shall be treated either as a supply of goods or supply of service as referred in schedule 2. So now schedule 2 will mention either a supply of goods or supply of service. Next, subsection 2 of section 7. Notwithstanding anything contained in subsection 1, so this is other than whatever is mentioned in section 7 subsection 1, separate that activity or transaction specified in schedule 3 or such activity or transaction undertaken by the CGSG or any local authority in which they are engaged as a public authority as may be notified by the government on the recommendation of the council shall be treated neither as a supply of goods nor a supply of service. So your first part, whatever is mentioned in schedule 3, that is not a supply. Okay, and anything central government or state government or any local authority is doing, that is again not a supply. So if it is not a supply, no GST. Okay, subject to the provisions of subsection 1, 1a and 2, government may on the recommendation of the council specify by notification that transaction data to be treated as a supply of goods and not as a supply of service, or a supply of service and not as a supply of goods. So government has the power to make something as a supply of goods and not as a supply of service, or something as a supply of service and not as a supply of goods. Okay, this is somewhere part of composite supply and the thing, composite and mixed supply, where we will understand. I'll just give you one brief example. When printing of books or pamphlet or etc. is happening, there are a few other examples also in this part, it will come in later, but that printing of that activity, book printing or pamphlet etc. are part of supply of goods, and normal envelope printing or etc. are happening, okay, where it is considered supply of service. Next, analysis. The definition of supply as contained in section 7 is an inclusive definition and does not define the term exhaustively. It defines the scope of supply in an inclusive manner. Clause A of subsection 1 illustrates the form of supply, but the list is not exhaustive. This is further substantiated by the use of words such as in the definition. Provision of scope of supply under CGST Act have also been made applicable to IGST Act, vide section 20 of the IGST Act. The meaning and scope of supply in terms of section 7 can be understood in terms of the following parameters. Number 1, supply should be of goods or service. Number 2, supply should be made for a consideration. And number 3, supply should be made in the course or furtherance of business. Okay, so first it should be of goods and service, it should be made for a consideration, and in the course or furtherance of business, and then it is supply. Okay, so parameters are defined here in a graphical pictorial manner. Okay, 3 parameters for consideration of goods and service in the course or furtherance of business, that should supply should be. Okay, Next, aforesaid parameters describe the concept of supply. However, there are a few exceptions to second and third parameters. Second and third parameters. So second and third parameters is consideration and the course or furtherance of business. Okay. Yeah. The requirement of supply being made for a consideration and in the course or furtherance of business in the GST law. Few exceptions carved out where a transaction is deemed to be a supply even without consideration, contained in Schedule 1, discussed later in this chapter. Without consideration, Schedule 1 deemed supply. So something is made without consideration, which is mentioned in Schedule 1, okay, and it is again a deemed supply. So it is a deemed supply means GST will be GST is supposed to be paid with the same. Next, import of service for consideration, supply even if not in the course or furtherance of business. Similarly, the condition of supply, next, let me just read the bullet points first of all, what are given in the boxes. One is import of service for consideration, supply even if not in the course or furtherance of business. Second is neither supply of goods nor supply of service, given in Schedule 3, classified either as supply of goods or supply of service in Schedule 2. Okay, let's continue. Similarly, the condition of supply to be made in the course or furtherance of business has been relaxed in case of import of service. Import of service for a consideration, whether or not in the course or furtherance of business, is treated as supply. Okay, something is imported from outside India. Okay, so supply to be made in the course of furtherance of business has been relaxed in case of import of service. Import of service for consideration, whether or not in the course of furtherance, is again treated. Whatever is imported, whatever services are imported, okay, will be considered as a supply if it is without consideration also. Further, there are also cases where a transaction is kept out of scope of supply despite the existence of the above parameters. That is, there is a list of activities which are treated neither as a supply of goods nor as a supply of service, contained in Schedule 3, discussed later in this chapter. Next, classified either as supply of goods nor supply of service in Schedule 2. In other words, they are outside the scope of GST. Besides, GST law has classified certain activities or transactions either as supply of goods or as a supply of service in Schedule 2, discussed later in this chapter. Government also empowered to notify transaction data to be treated as a supply of goods and not as a supply of service, or a supply of service and not as a supply of goods. In the subsequent para, the above aspect of the supply has been extensively discussed. The discussion has been broadly categorized into following. Supply, which what it includes, what it excludes. Okay, so supply includes supply of goods or services for a consideration in the course or furtherance of business, activity, or transaction between a person other than an individual and its member of constituents for cash, deferred payment, or other valuable consideration. Section 7, subsection 1, clause AA. Importation of service for a consideration, whether or not in the course or furtherance of business. So here import of service is with consideration. Okay. Supply without consideration, section 7 1C plus Schedule 1. Then activities to be treated as supply of goods or supply of service, section 7 1A plus Schedule 2. Non-supply under GST, section 7 2 plus Schedule 3. Further, the bifurcation is for 7.1a, supply should be of goods or services or both. Supply includes specified form of supply, should be for consideration, should be in the course or furtherance of business. Form of supply, consideration in the course or furtherance of business. Supply of goods or services for consideration in the course or furtherance of business. Supply should be of goods or service or both. Supply should be of goods or service or both. Okay. The definition of supply begins with the term supply. Supply includes. Supply includes, thus making it clear that CGST Act intends to give an extensive meaning to the term supply. Supply includes all forms of supply of goods or services or both. Supply of anything other than goods or service like money, securities, etc. does not attract GST. Okay, so your word used is includes. Okay, I think in page number 8 or somewhere they had given this thing, right? See, yeah, they have given definition. Sorry. So definition in which expression means has been used are exhaustive definition. Consequently, the scope of these definitions cannot be expanded. Definition in which expression include has been used are inclusive and are not exhaustive. Definition exclusive, exhaustive definition. Resonantly, the scope of the definition is wide. Okay, so wherever means is used, it is finished. Definition, whatever is mentioned in the definition, we have to follow. Wherever include word is used, it is expand. It can expand. Okay, there are multiple scopes are there. Yeah. Supply includes all forms of supply of goods or service or both. Supply of anything other than goods or service like money, security does not attract GST. Supply goods or service, but anything which is neither goods or nor service is removed. Okay, so money, security is not a supply. These are the two examples. Okay, there might be many other also. We'll check. The term goods and service as defined under the CGST Act have been analyzed by way of a diagram on next page. Anything supplied other than goods or service is outside the scope of supply. So anything other than goods is outside the scope of supply. If money and securities are not considered as a goods or not considered as a supply, then it should be kept outside. Goods means every kind of movable property. Service means anything other than goods, but it excludes money and security. But still, goods include actionable claims, growing crops, grass, and things attached to or forming part of the land which are agreed to be severed before supply of, or under a contract of supply. So, actionable claims are covered, which is again they have given some star mark. Now, please refer the definition of actionable claims and money is provided in heading 2 relevant definitions. Okay, so they have mentioned activities relating to use of money or conversion of money by cash or by any other mode from one form or currency denomination to another form for which a separate consideration is charged. So activities relating to use of money or conversion of money by cash or by any other mode from one form currency to denomination or another for which separate consideration charge means where there is exchange of currency. Okay, they charge you some commission. So whatever commission is charged, that is again part of the service, and it will GST will be paid on the same. Likewise, in case of actionable claims also are part of your goods and growing crops. Okay, so here they have said every kind of movable property, but growing crops are not moving, grass is not moving, and things attached to or forming part of the land which are agreed to be severed before supply or under a contract of supply. So whatever can be cut and whatever is growing like from the land, and the contract is made before cutting the same. So there can be an interpretation of the people that you say supply of goods is when it is a movable property, but my goods, when I did the transaction, it is not movable, so I will not pay GST on the same. It's not like that. They have included that thing, that though it is part of the that is attached to the land, okay, but still it can be severed. Severed means it can be cut and sold, so it will become your part of supply, okay, of goods, supply of goods. Okay, in the definition part, let us go and check money and this thing, securities definition, if it is given somewhere. Business actionable claim is given here, see. So means a claim to any debt other than a debt secured by mortgage or immovable property or by hypothecation or pledge of movable property, or to any beneficial interest in movable property not in the possession either actual or constructive of the claimant, which the civil courts recognizes affording ground for relief, whether such debt or beneficial interest be existent, accruing, conditional or contingent. Section 2 subsection 1 of the CGST Act read with section 3 of the TOPA, Transfer of Property Act. So a claim to any debt other than debt secured by mortgage of immovable property or by hypothecation or pledge of movable property, or to any beneficial interest in movable property not in the possession either actual or constructive of the claimant, which the civil court recognizes affording grounds for relief, whether such debt or beneficial interest be existent, accruing, conditional or contingent. Section 2 subsection 1 of CGST Act. Okay, next, money is given. Money means the legal tender or any foreign currency, check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler check, money order, postal or electronic remittance, or any other instrument recognized by Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, but shall not include any currency that is held for its numismatic value. Section 2, subsection 75. Okay, so money, they have given you the definition: actionable claim, any claim, a claim to any debt, but other than. So these things are again removed from actionable claim. That is a debt secured by any mortgage of immovable property or hypothecation or pledge of a movable property, or to any beneficial interest in movable property not in the possession, either actual or constructive, of the claimant, which the civil court recognizes as affording. I think this needs further elaboration. You will check if anything is given in the further part. I am also a bit confused here. Yeah. So next, page 1.17. Supply includes specified form of supply, should be for consideration and should be in the course or furtherance of business. The first part of section 7 clause A of subsection 1 includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for consideration in the course or furtherance of business. Forms of supply. Supply is sale, transfer, barter, exchange, license, rental, lease and disposal. Okay, plus for a consideration, plus in the course or furtherance of business. Okay, it is important to note that supply includes all forms of supply within its purview, though 8 illustrative forms of supply have been enlisted in the definition. 8 illustrative. Okay, but all form of supply within its purview includes, your word is includes. Okay, so this 8 thing, sale, transfer, barter, exchange, license, lease, uh, this rental, disposal. Okay, these things are given. Further supply is contemplated in this first part has two prerequisites. Number one is supply should be for a consideration and supply should be in the course or furtherance of business. We shall first discuss the various forms of supply as illustrated in section 7.1a in detail. Forms of supply. Various forms of supply contemplated in section 7.1a are sale, transfer, barter, exchange, license, rental, lease or disposal. 1 2 3 4 5 6 7 8. Okay, 1 2 3 4 5 6 7 8. Okay, yeah, these forms of supply are only illustrative and not exhaustive. However, none of these terms have been defined under the Act. In order to understand their meaning, we have taken recourse to their dictionary meaning or otherwise and have explained them as follows. Okay, so in the Act, these things are not defined, but with the help of a dictionary, they are doing. So dictionary they have mentioned over here. They have taken reference from the two different dictionary. One is Merriam-Webster and second is Macmillan Dictionary. Okay, they have given us the reference over here. So wherever one is used, it is from Merriam-Webster, and wherever two is used, and wherever three is used, it is Macmillan and Dictionary. Okay. So first, supply and transfer. The dictionary meaning of a term, sale and transfer. Sale and transfer. The dictionary meaning of the term sale is the act of selling. Specifically, the transfer of ownership of and title to property from one person to another for a price, as per the Sale of Goods Act 1930. A contract of sale of goods is a contract whereby the seller transfers or agrees to transfer the property in goods to the buyer for a price. Further, the term transfer has been defined in the Black Laws Dictionary as to convey or remove from one place, person, etc. to another, pass or hand from one to another, specifically to make over the possession or control of. Okay, so for respect to sale, the definition is for here they have given you a small 2 over here. So this is definition is from Merriam-Webster, and as per Sale of Goods Act also they are giving you the contract. They are giving the reference of the Sale of Goods Act, that is a contract of sale of goods is a contract whereby the seller transfers or agrees to transfer the property in goods to the buyer for a price. Okay, you just need to recall what was studied in CA Foundation, particularly in your business law, right? There was, I think, Sale of Goods Act as a part of the curriculum. Apart from that, with respect to transfer, it is taken from Black's Law Dictionary. Okay, to dictionary has to convey or remove from one place or person to etc. to another, pass or hand over from one to another, specifically to make over the possession or control of. They have given us two examples with respect to the same. Number one is a shopkeeper sells a pen for rupees 100 to the buyer. After the sale, the pen belongs to the buyer and shopkeeper does not have any right on the pen. This is a transaction of sale. Okay. Second, a company transfers goods from its factory to the depot for sale purposes. This is transfer of goods where the sale has not yet taken place. So, first part, shopkeeper is selling a pen. Second part, company transfers goods from its factory to a depot for sale purposes. This is transfer of goods where the sale has not yet taken place. So sale and transfer, two things are happening. One is factory to depot. Depot means where actual selling is happening. Factory is, you are aware, right, that where goods are being manufactured. Next is barter and exchange. The dictionary meaning of the term barter is to exchange goods or services for other goods or services instead of using money. So this is taken from your Macmillan dictionary, this definition. Here they have mentioned 3 in a small font. Next, reference is given. Black's Law Dictionary defines the term exchange as an act of giving or taking one thing or another, while barter deals with a transaction which only includes an exchange of goods or service. Exchange may cover a situation where the goods are paid for partly in goods and partly in money. When there is a barter of goods or service, same activity constitutes supply as well as consideration. Okay, it is a supply as well as consideration are there. When a new car worth rupees 5 lakh is purchased in exchange of an old car worth along with the monetary consideration of rupees 4 lakh paid for the said purchase. Exchange. This is an exchange transaction. When new car is 5 lakh rupees, old car was, but the monetary value paid is 4 lakh rupees. Okay, so an old car is also given along with that. A doctor got his hair cut from a barber and provides his medical consultancy in return. In this transaction, the doctor provided the medical consultancy services to the barber, for which consideration was in the form of hair cutting services provided by the barber. Similarly, the barber provided hair cutting services to the doctor, for which consideration was in the form of medical consultancy services provided by doctor. So, doctor is providing service to barber and barber is providing service to doctor. This is a barter transaction. License, lease, rental and disposal. The dictionary meaning of the term license is a permission granted by the competent authority to engage in a business or occupation or in an activity otherwise unlawful. Here they have given reference of point 4. So that is Merriam's dictionary. Merriam-Webster, na? Yeah. So this is about license. There is a permission granted by a competent authority to engage in a business or occupation or in an activity otherwise unlawful. Something is unlawful, but for which there is a license. Permission is granted by the competent authority to engage in a business or occupation or in an activity otherwise. Okay, normal person cannot sell guns and something like that. Okay, but for that it is unlawful, but government gives the license for the same. The dictionary meaning of rental is an arrangement to rent something or the amount of money that you pay to rent something. Rental is an arrangement to rent something or the amount of money that you pay to rent something. And that of lease is to make a legal agreement by which money is paid in order to use land, a building, a vehicle, or a piece of equipment for an agreed period of time. Lease is to make legal agreement by which money is paid in order to use land, building, vehicle, or a piece of equipment for an agreed period of time. For a longer period of time, usually monthly rental is given, but for longer, I think rent agreement is like less than 11 months is the period where rental, lease and license, live-in license agreement is being prepared. Beyond 11 months, I think lease will be there, and it is for an agreed period of time. Next, Black's Law Dictionary defines disposal as the sale, pledge, giving away, use, consumption, or any other disposition of a thing. Under GST, such licenses, lease, and rentals of goods with or without transfer of right to use are covered under the supply of service because there is no transfer of title in such supplies. Such transactions are specifically treated as supply of service in Schedule 2 of the CGST Act. Schedule 2 has been defined in detail in the subsequent para. As discussed earlier, one of the parameters to qualify a supply of goods and or service is that a supply is made for a consideration. This parameter has been explained in following paras. Consideration. The dictionary meaning of word consideration is payment. So, wow, this is amazing. Consideration is payment. This is the best definition I have read. Consideration need not always be in the form of money. It can be in money or in kind. It covers anything which might be possibly done, given or made in exchange or for something else. Further, a consideration need not always flow from the recipient of the supply. It can also be made by a third person. However, any subsidy given by the central government or state government is not considered as consideration. A deposit given in respect to supply of goods or services or both shall not be considered as a payment made for such supply unless the supplier applies such deposit as consideration for the said supply. The term consideration is defined under Section 2, subsection 31, refer heading relevant definition. The said definition has been depicted in the form of a diagram as follows. Consideration. Number 1, payment in money or otherwise for the supply. Deposit to be considered as supply only when the supplier applies such deposit as consideration for the said supply. Monetary value of any act or forbearance for the supply by recipient or any other person, excluding subsidy given by government. So anything monetary value is given, okay, monetary value of any act or forbearance for the supply by recipient or any other person. Okay, so anything is given in terms of money, but again, central government and state government if giving any subsidy, then it is not a supply. So it means that other than central government or state government, any trust is giving any money, okay, to compensate something. So for example, school kit is prepared, okay, by a manufacturer of stationery, and that stationery value, say for example, is 1,000 rupees, but of which 200 rupees is given by trust to the organization that give this thing for a charity, okay, and we will contribute 200 rupees out of the 1,000 rupees. 800 rupees you bear it, the organization, okay. So here the 200 rupees will be added as a consideration because it is not given by government, but it is given by the money is given by the trust. Let us examine the existence of consideration in the following 3 scenarios. Donation received by charitable institution from individual donors without quid pro quo, something for something. Okay. Next, artwork sent by artists to galleries for exhibition, and no claim bonus order offered by an insurance company to the insured. So here donation is given, donation is received by the institution from individual donors without quid pro quo, means there is no nothing is to be given in return, okay. Second, arts work sent by artists to galleries for exhibition and no claim bonus offered by insurance company to the insurer. It is defined in defined further. Let us read that. Donation received by charitable institution from individual donors without quid pro quo. What is the given? Anything obligation to do anything. Any obligation to do anything in return of the donation. Okay. And an important feature of consideration is quid pro quo, something for something. Donation received by the charitable organization treated as consideration only if there exists quid pro quo. That is, there is an obligation on the part of the recipient of the donation or gift to do anything, supply a service. Okay, so a charitable hospital is there. Okay, somebody is donating a particular amount, and plus the person is getting any service from the hospital also. Means Mr. A is giving, there is a trust called XYZ, and Mr. A is donating 3 lakh rupees to the trust, okay. In return of that, the trust has given him some medical treatment, the hospital has given him medical treatment of say volume of rupees 5 lakh. So he has given 3 lakh, in terms he is getting value for 5 lakh rupees. So that 3 lakh rupees indirectly it is payment for the services. Generally, institutions such as religious institutions, charitable organizations, school, hospital, orphanage, old age homes, etc., receive financial help or any other support in the form of donation or gift from the individual donors. In order to express the gratitude towards such help or support, the recipient institutions place a name plate or similar such acknowledgement in their premises. When the name of the donor is displayed in recipient's institution premises in such a manner which can be said to be an expression of gratitude and public recognition of donors' act or philanthropy, and is not aimed at giving publicity to the donor in such manner that it would be an advertising or promotion of his business, then it can be said that there is no supply of service for the payment in the form of donation. In other words, there is no obligation quid pro quo on part of recipient of the donation or gift to do anything. There is supply of service. There is supplier service. Therefore, there is no GST liability on such payment. Some examples of cases where there would be no taxable supply are as follow. So they have given us the example, right? This is example related to Mr. Bhushan donated a blackboard to Yoganist Sansthan, a charitable yoga institution. Yoganist Sansthan printed underneath the blackboard, show donated, good wishes from Mr. Bhushan. Okay, he has written simply good wishes from Mr. Bhushan. So this is not a here. This donation is a not a transaction of quid pro quo. They are just thanking to the person. Okay. Next, Srimati Durga Devi donated some money to temple in the memory of her late father. The temple trust constructed a room in the temple complex for donation and wrote donated by Srimati Durga Devi in memory of her father on the door floor of the room. Again, this is not a transaction where supply is happening, right? Because in this donation there is no mention of any business organization detail or something. In the above example, maybe notice that there is no reference or mention of any business activity of the donor which otherwise would have got advertised. Thus, GST is not leviable where the following three cumulative conditions are satisfied, namely, three conditions should be satisfied. Number one, gift or donation made to a charitable organization. Okay, gift or donation is made. First thing, there is something gift or donation should be there. Second, payment has the character of gift or donation. The character of the payment is gift and donation. Okay. Third, purpose is philanthropy and not advertisement. That is, it leads to no commercial gain. Purpose is philanthropic and not advertisement. Okay. So this is given by a circular number 116/35 of 2019, GST dated 11th October 2019. Okay. Next, artworks sent by artists to galleries for exhibition is not a supply as no consideration flows from the gallery to the artist. Whenever an artist sending his work or artwork to a gallery for exhibition, it is not a supply because there are no transactions are sale. If sale happens from there, then it will be supply. Unless it is staying in the art gallery, it is not a supply. Artists give their work to art to galleries where it is exhibited for supply. However, no consideration flows from the gallery to the artist when the artworks are sent to the gallery for exhibition, and therefore the same is not a supply. It is only when a buyer selects a particular artwork displayed at the gallery that the actual supply takes place and applicable GST would be payable at the time of such supply. So when some buyer comes up and pays the money, then it is a supply. Then GST will be levied. No supply of service by the insured to the insurance company in lieu of no claim bonus offered by said insurance company to him. Like, see, there are different definitions come into the picture. I can just give you a bit reference of income tax. A few years back, for a salaried people, those who are central government or state government employee or Indian Railway employee, they have very good premises in the prime location in the metro cities. Okay. And there was a case law came up that income tax officer charged notional rent on that property. It was a rent-free house given, okay, to the employee, and notional rent was charged by the income tax officer, and assessment was done. Okay, so for the same thing that was denied by the, I think, some court or high court or supreme court or something, that case went further, and it was denied that you cannot charge notional rent on house rent when the transaction itself is a house rent. uh, Rent-free accommodation is given. Rent-free accommodation is given, though you cannot charge. Likewise, here also, see, the insurance companies are, if a person has not made any claims, okay, so insurance company usually provide no claim bonus on the same. Like, say for example, if I take a policy for vehicle, okay, for myself, or a vehicle, or health insurance, or medical insurance, anything, if a policy is taken and the value of the policy is say for example 20,000 rupees, okay, but so in the first year we pay 20,000. In the second year, if there is no claim being made, so they will reduce certain portion of the policy. So whatever no claim bonus is provided, again it cannot be part of, because no money is taken. Direct discount is there, right? So on discount you cannot charge, but still there might be a this thing might have created a confusion. So by they have clarified it with circular over here, okay. So no supply service by insured to the insurance company in lieu of no claim bonus offered by said insurance company to him. The issue which arose for consideration was whether a deduction on account of no claim bonus allowed by the insurance company from the insurance premium payable by the insured can be considered as consideration for the supply provided by the insured to the insurance company for agreeing to the obligation to refrain from the act of lodging insurance claim during the previous year. As per the practice prevailing in insurance sector, the insurance companies deduct no claim bonus from the gross premium insurance premium amount when no claim is made by the insured person during the previous insurance period. The customer or insured procures insurance policy to indemnify himself from any loss or injury as per the terms of the policy, and is not under any contractual obligation not to claim insurance claim during any period covered under the policy in lieu of no claim bonus. It is therefore clarified that there is no supply provided by the insured to the insurance company in form of agreeing to the obligation to refrain from the act of lodging insurance claim during previous years, and no claim bonus cannot be considered as a consideration for any supply provided by the insured to the insurance company. My God. Circular number 186 of 18 2022 GST dated 27 December 2022. See, government might be issuing lot many circulars during the year, okay, but there are few things which are covered for academic purpose. Among them, one is circular number 186 of 2022 in the month of December. So by December 27, 186 circulars were issued. Okay, there might be more or less also. There might be more also on that same day. They might have issued a few more circulars also, but this is 186. So what I'm trying to tell you is everything is not relevant for the exams, but whatever is relevant and they feel, institutes feel, ICAI feels that this is to be covered for academic purpose, when the said circulars are being added. Otherwise, the rest of the things are becomes part of our normal study material. Okay. Next, salvage or wreck value earmarked in claim assessment of damage caused to motor vehicle. Okay, so when an insurance claim is lodged by a motor vehicle, okay, and salvage value, so what will happen? What will happen to that salvage value is explained here. Okay, let us read and understand. In case of motor vehicle insurance provided by the insurance companies engaged in providing general insurance services, such companies insure the cost of repairs or damages of motor vehicle incurred by the policyholder. In case a claim is made by an insurer for damage of the motor vehicle, while settling said insurance claim, the general insurance companies, as per the pre-decided terms of the insurance contract. So there are two things happen. One, where the insurance company will take the vehicle, otherwise they will leave it. Okay. So number one, deduct the value of salvage or wreckage of the motor vehicle as deductible from the claim amount paid to the insured. The salvage remains the property of the insured, and insurance company are not liable to discharge GST liability on the same. It means there is a general insurance company, example, general insurance company, and there is a person who has taken motor insurance and he is lodging a claim. Okay, so here the salvage value is deducted from the insurance amount and remaining amount is paid. Okay, so for example, motor insurance, car insurance was taken for 10 lakh rupees. Out of 10 lakh rupees, post accident and anything happens, the 1 lakh rupees is deducted as a salvage value. Okay, so 9 lakh rupees is paid back to the insured. So here that 1 lakh rupees salvage is not a part of the supply, and here GST will not be levied. Do not deduct the value of salvage wreckage of the motor vehicle and pay the full amount of insurance claim. Salvage becomes the property of the insurance company, and the insurance company will be obligated to discharge GST on supply of salvage of the salvage to the salvage buyer. So here full value, if the full value is given for the car, okay, then salvage becomes part of the insurance company and they will have to pay GST. Any transaction involving supply of goods and or services without consideration is not a supply unless it is deemed to be a supply under law in Schedule 1 of CGST Act. Provision of Schedule 1 have been discussed in details later in this chapter. Another parameter to qualify as supply of goods and or services is that a supply is made in the course or furtherance of business. This parameter has been explained in the following para. So course or furtherance of business. Okay, so until now we are just learning supply thing, the definition part. So all the things are bifurcated. All the definition, each word has been explained in a detailed manner. GST is essentially a tax only on commercial transaction. Hence, only those supplies that are in the course or furtherance of business qualify as supply under GST. Resultantly, any supplies made by an individual in his personal capacity do not come under the ambit of GST unless they fall within the definition of business. Meaning of supply made in the course or furtherance of business. Any activity undertaken in course or furtherance or for furtherance of business would constitute a supply. In order to understand the term in the course or furtherance of business, we need to first understand the term business. Business as defined under section 2 subsection 17 inter alia includes any trade, commerce, manufacture, profession, vocation, etc., whether or not undertaken for a monetary benefit. The definition of business has been summarized in the diagram below. Business includes any trade or commerce, manufacture, profession, etc., even if there is no monetary benefit. Any activity incidental or ancillary to it, any activity of same nature, even if no volume or continuity. Next, supply or acquisition of goods including capital goods and services in connection with the commencement or closure of business. Commencement or closing of business. Supply or acquisition of goods including capital goods or services. Okay, so business is acquired or business is closed down. Again, it is part of the business definition. Provision of facility by club or association, etc., to its member for consideration. So members are getting some services. Okay, so again it will be part of business. Admission for a consideration to any premises. Okay, going for a movie or going for a concert or going for nowadays I don't know, on YouTube I saw one thing that bhajans are also being done. So they charge some fees and bhajan are being played there. So all the thing, whatever payment is there. So there is a limit. There is a limit. I think 500 rupees is the limit. More than 500 rupees is there, then GST will be levied. Up to 500, I'm not sure. We will check it. I will check as and when it comes. Service as a holder of office, accepted in course or furtherance of trade or profession. Service as a holder of office, accepted in the course or furtherance of trade or profession. Activities of a race club, including by way of totally setter or a license to bookmaker or activity of a licensed bookmaker in such club. Any activity by government or local authority as a public authorities. So all these things are business. Okay, does business include any activity transaction which is incidentally or ancillary to any trade, commerce, manufacture, profession, vocation, adventure, wager, that is bet, or any other similar activity. In addition, any activity undertaken by the central government or state government or any local authority in which they are engaged as a public authority shall also be constituted as business. For any trade, commerce, or any other similar activity to qualify as business, frequency, volume, continuity, or regularity of such transactions is not a prerequisite. So it should not, there is no prerequisite that if frequency or volume or such things are not checked there. Okay, once in a while transaction also is also considered as a business. Some of the examples of supply made or not made in the course or furtherance of business are as follow. Number 7. Example number 7 is Rishabh buys a car for his personal use and after a year sells it to a car dealer. Sale of car by Rishabh to car dealer is not a supply under CGST Act because said supply is not made by Rishabh in the course or furtherance of business. Okay, so here he was using car for his personal use. Okay, and after year sells it to a car dealer. So here this is not a supply under CGST Act. Okay, next, Manikarnika sold her old gold bangles and earrings to Abhushan jewelers. Sale of old gold jewelry by an individual to a jeweler will not constitute supply, as the same cannot be said to be in the course or furtherance of business of the individual. Since business includes vocation, therefore supply of goods or services as a vocation is also a supply under GST. Sundaramacharya, famous actor, paints some paintings and sells them. The consideration from such sale is to be donated to a charitable trust, Kind Human. The sale of painting by the actor qualifies as supply as it is made in the course or furtherance of business. Though the actor is doing some painting and for the said painting he is receiving some consideration, so it is a supply. So this painting is by the actor qualifies as supply as it is made in the course or furtherance of his business. Facilities provided by a club or association to its members for consideration are provided in the course or furtherance of business. They have given clarified white GST FAQ issued by CBIC. So point number 9, wherever 9 is mentioned. Okay. Then point number 10, clarified by CBIC white press release 13th July 2007 GST fly the meaning and scope of supply. The view taken in example 7 and 8 about is based on the view taken in the departmental FAQ oblique press release. There is another school of thought according to which since the definition of business includes trade, commerce or any other similar activity, whether or not there is a frequency, volume, continuity or regularity of such transaction or literal interpretation, the transaction in the above examples can be considered to be made in the course or furtherance of business and thus will constitute supply. The taxability of such transactions, however, will have to be examined under the provisions of section 9 discussed in detail in chapter 2, charge of GST, in this module of the study material. However, since this view may not always lead to logical conclusions, it is more prudent to take a purposive approach as followed in departmental FAQ or oblique press release given above. Okay, so we don't see frequency, volume, continuity, etc. Okay, next, example number 10, a resident welfare association provides the service of depositing the electricity bill of the resident in lieu of the some nominal charges. Provision of service by a club or association or society to its members is included in the definition of business. So if they are charging some nominal charges being taken, right? So this is a business. Admission of a person to any premises for a consideration is also included in business. Service by way of admission to circus, cinema hall, amusement park, including theme parks, water park, etc., are considered as supply. As these are services by way of admission of persons to any premises for a consideration. Business includes activities of a race club, including by way of totalisator or a license to bookmaker, or activities of a licensed bookmaker in such club. Royal Turf Race Club is engaged in facilitating the wagering, that is betting, transaction on horse is placed through totalisator. For providing the service of facilitating wagering transaction, Royal Turf Race Club gets commission, which is deducted and retained by the club from the total bet value. Said services amount to supply as the activities of a race club are included in business. There is one exception to this course or furtherance of business rule, that is import of service for a consideration. From the above discussion, it can be inferred that if an activity or transaction satisfies all the above parameters as discussed in point A, B and C above, said activity or transaction qualifies as supply under GST. Bookmaker is a person that accepts and pays off bets on sporting and other events at agreed upon odds. Totalisator is a device showing the number and amount of bets stake on a race to facilitate the division of the total among those backing the winner. So this is about like what you call betting and everything they're talking about, right? So any money is being taken by them. So that is again business. Okay, after understanding the basic concept of supply, let us now examine taxability of few transaction. Taxability of cost petroleum. Okay, when an oil exploration and production contractor gets a license or lease to explore or mine the petroleum, crude and or natural gas from the government, it enters into a production sharing contract with the government. The relationship of the contractors with the government is not that of partner but that of licensor, lessor and licensee/lessee. As per the production sharing contract, when a contractor discovers oil or gas, he is at first entitled to recover the contract cost, expenses incurred in exploration or development, production and payment of royalty involves in the extraction of oil or gas from the total sale proceeds, and thereafter he is expected to share with the government the profit from his venture known as profit petroleum as per the production sharing contract. The value of petroleum which the contractor is entitled to take in a year for recovery of the contract cost is called cost petroleum. Further, the total value of petroleum produced and saved from the contract area in a particular period as reduced by the cost petroleum is called profit petroleum. The government share of profit petroleum, which is the consideration paid by the contractor to the central government for the services of grants of license or lease to explore mine petroleum, crude and natural gas, is exempt from GST. Okay, so first part they are recovering the cost, that is cost petroleum. Second part, the profit petroleum, which is shared to the government. Okay, the profit petroleum, the total value of petroleum produced and saved from the contract area in a particular period as reduced by the cost petroleum is called profit petroleum. The government share of profit petroleum, which is consideration paid by the contractor to the central government for the services of grant of license or lease to explore or mine petrol, crude, natural gas, is exempt from GST. So the profit petroleum is exempted. Cost petroleum is recovery. So for the recovery part, it is not a part of supply. Okay, but profit petroleum is a supply, but it is again exempted. The cost petroleum is not a consideration received by the contractor for the services provided to government and thus not taxable per se. The reason for the same is that the contractors carry exploration production of petroleum for themselves and not as a service to the government. The reason for the same is that contractor carry exploration production of petroleum for themselves and not as a service to government. They have acquired the right to explore, exploit and sell petroleum in lieu of royalty and share in profit petroleum. Okay. So again, they have given a reference of circular number 32 of 2018. Okay. Refer chapter 4 exemption from GST in this module of the study matter for detailed discussion. Okay, so exempt from GST. So whatever is exempt from GST, it is part of chapter 4. Okay, we will study there. So here what the basic concept is that cost petroleum is the recovery of the expenses incurred, so it is not taxable, and profit petroleum is again exempt from GST. Right, circular. Yeah, next. Financial transactions. Banks and financial institutions provide a bouquet of financial services relating to lending or borrowing of money or investment in money and any other related services. For such services, invariably a variety of instruments are used in financial markets. In the following paras, we have examined whether transactions in such instruments qualify as supply. As seen earlier, the definition of goods and services specifically excludes both money and securities. The definition of money includes instruments like checks, drafts, pay orders, promissory notes, letter of credit, etc. Therefore, activities that are only transaction in such instruments would be outside the definition of service. Money would also include transaction in commercial paper and certificate of deposits, as they are in the nature of promissory notes, issuance of draft or letter of credit, etc. While these transactions are outside the ambit of supply, the related activity for which a separate consideration is charged is chargeable to GST if other element of taxability are present. Okay, so whatever commission is charged in between, that is taxable under GST. Commercial paper, certificate of deposits, it is included in money. Okay. So these are outside the ambit of supply, and related activity is, if separate consideration is charged, it is chargeable to GST. Next, commercial paper and certificate of deposit are understood as unsecured money market instrument which may be issued in the form of a promissory note or in a dematerialized form through any of the depositories approved by and registered with SEBI. Commercial paper are normally issued by highly rated companies, primary dealers and financial institutions at a discount to the face value.
Commercial deposits can be issued by scheduled commercial banks, excluding RRBs and local area banks, and all India financial institutions permitted by RBI. Next, the term security shall have the same meaning as assigned to it in Clause H of Section 2 of the Security Contract Regulation Act, that is CARA, Section 2, subsection 101. So this Section 2, subsection 101 is of GST, but they have mentioned CGST Act, and they have taken that for securities, take the reference from SCARA. In this regard, there may arise a doubt as to whether a derivative is included within the meaning of securities above and whether derivatives are liable to GST. Before that, let us understand what derivative means in simple terms. Derivatives are financial contracts or instruments that derive their value for something else like underlying assets. They are kind of bets or agreement based on the price or performance of the underlying assets rather than owing the assets directly. Derivatives are included in the definition of securities under SCARA. As the derivatives fall in the definition of securities, they are neither goods nor services and hence are not liable to GST. Okay, so derivative, with respect to derivatives, there is some underlying assets are there, but it is not considered as good or not considered as service. Okay. The two most type of derivatives are future contracts and forward contracts. In simple terms, forward and future contracts are similar to making a promise to buy or sell something like a commodity, example oil or wheat, financial assets, example stocks, bonds, or even a market index, example S&P 500, at a specific price on a future date. It is an agreement or contract between the two parties to buy or sell that something at a specific price on a specific date in future. On a specified date in future, the contract needs to be settled. These contracts can either be settled by way of actual physical delivery of the underlying assets or by way of net settlement of differential rate with no actual delivery. The primary difference between the future and forward contract is that future contracts are standardized derivative contracts traded on organized exchange and mark to market daily, whereas forward contracts are customizable over the counter derivative contract and not traded on organized exchange but negotiated between two parties without any daily mark to market requirement. Okay, so in future contracts, the forward contract, future contracts are standardized derivative contract and are traded on organized exchanges. Okay, and mark to market is done for the same, but for forward contract, it is between two parties. Okay, GST implications on future contracts. Since future contracts are in the nature of derivatives, these qualify as securities and thus are not subject to GST. However, where the future contracts have the delivery option and the settlement of contract takes place by way of actual delivery of underlying commodity or currency, then such future contracts will be treated as normal supply of goods and liable to GST. GST implication on forward contracts. So when actually goods are being transferred now, then GST will be paid. Where the settlement takes place by way of actual delivery of underlying commodity or currency, then such future forward contract would be treated as normal supply of goods and liable to GST. Where the settlement takes place by way of net settlement of differential of the forward rate over the prevailing market rate on the settlement date, the same would be falling within the purview of securities and thus are not chargeable to GST. Okay, so forward contracts, again in forward contract, if the actual delivery happens, then it is GST is leviable. Okay. GST implication on secured debt. Sale or purchase, acquisition or assignment of a secured debt does not constitute a transaction in money. It is in the nature of a derivative, hence a security. Okay, secured debt does not constitute transaction in money. GST implication on transaction in instrument. Transaction in instrument like interest rate swaps and foreign exchange swaps would be excluded from the definition of supply, since such instruments are derivatives being secured based on contract of difference. GST implications on service by way of extending deposits, loans or advances. Services by way of extending deposits, loans or advances, insofar as consideration is represented by way of interest or discount, is exempt from the levy of GST. The same has been discussed in detail in chapter 4, exemption from GST, in this module of the study material. It is important to note that GST would be levied on service charge normally charged for various transactions in money, including charges for making draft, issuance charges for letter of credit, etc., or service charge or service fees, or documentation fee or broking charge or such like fees or charges charged on the derivative or future contracts, forward contracts, and the same would be consideration for a provision of services. Let us check this part. This is important. In terms of Schedule 2H of SCARA, security includes, so they have given you the definition of securities, and here they have given you definition of derivatives. Okay, so securities include share, scrips, stocks, bonds, debentures, debenture stocks, or other marketable securities of a like nature in or of any incorporated company or other body corporate. 1A is derivative, 1B is unit or any other instrument which by any collective instrument scheme to the investor. In such scheme, security receipts as defined in clause ZG of section 2 of the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. 1D is unit or any other such instrument issued to the investor under any mutual fund scheme. 2 is government securities. 2A is such other instrument as may be declared by the central government to be securities, and right or interest in securities. Okay, now 17. Reference to the point 17 is what is derivatives includes a security derived from a debt instrument, share, loan, whether secured or unsecured, risk instrument or contract for differences or any other form of security. A contract which derives its value from the price of or index of prices of underlying security. The definition of derivative in SCARA is an inclusive definition. Okay, so this is inclusive definition. Let's move ahead. So wherever there is a transaction, with respect to derivative, and where the actual delivery is not happening, then it is not a supply. Otherwise, it is a supply. But yeah. But again, where there is any commission or charges being levied, that is a supply of service, and on that GST will be levied. Lending of securities. Security Lending Scheme. Securities and Exchange Board of India has prescribed the Security Lending Scheme 1997, hereinafter referred to as SLS, for the purpose of facilitating lending and borrowing of security. The security lending mechanism depicted in the diagram below. Lender is giving his security to the approved intermediary. Approved intermediary gives securities to the borrower. In the above diagram, lender is a person who deposits the securities registered in his name or in the name of any other person duly authorized on his behalf with an approved intermediary for the purpose of lending under the scheme. Borrower is a person who borrows the securities under the scheme through an approved intermediary. Approved intermediary is a person duly registered by the SEBI under the SLS, through whom the lender will deposit the securities for lending and the borrower will borrow the securities. Under this scheme, lender of securities lends securities through an approved intermediary to a borrower under an agreement, temporarily for a specified period. The lenders earn lending fee for lending their security to the borrower. The securities are lent with the condition that the borrower will return equivalent security of the same type or a class at the end of the specified period, along with the corporate benefits accruing on the securities borrowed. The borrower of securities can further sell or buy these securities. In order to lend securities under SLS, lender enters into an agreement with the approved intermediary, and for the purpose of borrowing of securities, the borrower enters into an agreement with the approved intermediary. Thus, there is no direct agreement between the lender and the borrower for the lending or borrowing of securities, and there is an anonymity between them. The transaction takes place through an electronic screen-based order matching mechanism provided by the recognized stock exchange in India. As seen earlier in this chapter, securities are neither covered in the definition of goods nor covered in the definition of services. Therefore, a transaction in securities which involve disposal of security is not a supply in GST and hence not taxable. The SLS security lending scheme doesn't treat lending of security as disposal of securities, and therefore is not excluded from the definition of service. The lending fees charged from the borrower of securities has the character of consideration and is taxable under GST. Apart from the above, the activities of the intermediaries facilitating lending and borrowing of securities for a commission or fee are also taxable separately. Corporate benefits includes dividend, that is gross, rights, bonus, redemption, benefits, interest, or any other rights or benefit accruing on the security lent. Means a lender is giving his security, but he still will receive dividend or bonus or rights or redemption benefits or interest or any other rights. Whatever benefits are given, all things will be lender is the owner of the same. Securities of subsidiary company in a holding company. Holding company holds security in subsidiary company. Since securities include shares are considered neither as goods nor as a service, discussed detail earlier. So securities held by holding company in the subsidiary company are in neither goods nor services. Further, purchase or sale of share of security in itself is neither a supply of goods nor a supply of services. Merely because there is an entry in a scheme of classification of service to that effect, the activity of holding of shares of a subsidiary company by the holding company per se cannot be treated as a supply of service by a holding company to the said subsidiary company unless there is a supply of service by the holding company to the subsidiary company in accordance with section 7. As per the definition, securities clause 2, securities include shares. There is a specific SSE, Service Accounting Code, entry 99717 in the scheme of classification of service mentioning services provided by holding company, that is holding company or other equity interest in companies and enterprise for the purpose of owing and controlling interest. Okay, so here what it means that the activity of holding the shares by the company, the holding company per se cannot be treated as a supply of service. So holding company is having some share, okay, of a subsidiary company, that is not a supply. Okay. Cash calls in joint venture. Joint venture being an unincorporated temporary association constituted for the limited purpose of carrying out a specified project within a time frame, whether a cash call is merely a transaction in money or in the nature of consideration for taxable service would depend on the terms of the joint venture agreement, which may vary from case to case. Cash calls are raised by an operating member of the joint venture on other members in proportion to their participating interest in the joint venture, unincorporated, to meet the expenditure on the operations to be carried out as per the approved work program and budget. Let us understand the taxability of cash calls with the help of the following examples. There are 4 members in the joint venture, including the operating member, and each one contributing rupees 100 as part of their share. The total amount of 400 is collected. The operating member purchases machinery of rupees 400 for the JV to be used in oil production. In the above case, cash calls will not subject to GST since the operating member is not carrying out an activity for another for consideration. Here, the money paid for the purchase of machinery merely in the nature of capital contribution and is therefore a transaction in money. There are 4 members in the JV, including the operating member, and each one contributes rupees 100 as part of their share. A total of rupees 400 is collected. The operating member thereafter uses its own machinery and performs exploration and production activity on behalf of the JV. In the above case, the operating member uses its own machinery, therefore providing service within the scope of supply, because your operating member is recovering the cost appropriated towards machinery and services from other JV members in their participating interest ratio. Okay, in the subsequent para, we have discussed exceptions to the 2 parameters of supply, namely supply for consideration, but not in the course or furtherance of business, and supply made without consideration. So here in this JV part, what they are mentioning, that if new machine is purchased, JV is formed, and again new machinery is purchased from outside, JV is considered, so that 400 rupees is not part of the consideration and not levied to GST, not subject to GST cash calls. Okay, but in the second part where money is collected, okay, by one operator, and operator is using their own machines, okay, so that is in consideration and service. It is a part of service within the scope of supply, okay, and GST will be levied on the same. For the next part, I'm just closing this thing. We will continue further, okay, for the consideration or not and etc. Thank you.